Yes, sir.
So it is only for Bangalore-based chartered accountants or all over India?
All over India. We want to make it global.
Do it, do it.
Thank you, sir.
Technology is there, you can do anything.
Yes, sir.
Ultimately, Indianized.
Yes, sir. Correct.
So every week or every month?
Every week, sir. Each Thursday.
Thursday. Every week, Thursday.
It will be usually AI sessions. This time we have made it non-AI, since this is a burning topic for everyone.
AI session means machine language through the machine.
Yeah. Use cases on GPTs or Power BI, Python, such topics.
See, ultimately, all AI can give you only the information, no?
Yes, sir. Yes, sir.
See, this is what I don't know. We are the old school of thought students who qualified 40 years back.
Right, sir.
Only we learned the spelling of computer at the time of studying CA.
Correct.
Seen the computer after qualified.
Yes, sir. Correct.
But ultimately, whether it is a tab or iPad or computer or software, whatever the thing, it is only an information.
Yes, sir. Correct.
Converting into required knowledge is need of the human intervention.
Yes, sir. Good. Thank you, sir.
So, 30 minutes or 20 minutes?
Sir, you can go up to 30 to 40 minutes, no issues.
No. Why I am asking is your invitation you put 8 to 8:20. That's the reason.
Sorry?
In your invitation, you put 8 to 8:20.
Yeah, no. You can extend. You can go up to 30 minutes.
What is the reason behind choosing this topic?
This topic, people are not familiar because since it is amendment, I feel people are yet to open their books. That's why we opted this topic.
Okay. But my opinion is you should have a complete session on almost every clause which is considered to be necessary.
Definitely, sir.
See, there are 3 sets of chartered accountants. One chartered accountant is always update. For him, no session is necessary.
Correct.
The second chartered accountant think of tax audit only during the tax audit period. The third set of chartered accountant is who is new to the tax audit. There are 2 sets of people new to the tax audit. One is recently qualified. Another is who is shifting their career from practicing CA, non-practicing CA to practicing CA.
Yes, sir.
Or even practicing CA, not having experience in tax.
Correct.
Good. Somehow you are taking a step.
Thank you, sir.
1.5 page notification. 45 minutes discussion.
Okay. Friends, good evening, everyone. Thanks for attending this special session on tax audit related amendments. Today we have with us our profession veteran, evergreen chartered accountant, faculty, author, CAG Sekar Sir, to deliver this session. Friends, please fill the joining form which we have shared in our channel so that we can mail the session related materials and updates to you at the end of the session. I hereby welcome PA Sekar Sir for our forum. Over to you, sir. Other participants can kindly mute the request other members to mute. Swastik, can you identify from where the sound is coming and mute?
Mute, no? You can mute, right?
Yeah. You can proceed, sir.
Thank you, Amit.
Thank you, sir.
Good evening, Chartered Accountants. I don't know how many of you elders to me today participating. So I'm able to see some young faces only here. And Amit has contacted me 2 weeks back and he said that he wants a session on the recent amendments in Tax Audit Report Form 3CD. Before going on these amendments, I would like to share certain things. Tax audit in this country is just 41 years old. 1984, first time the tax audit was introduced. Finance Act 1984 only introduced the tax audit. 44 AB was introduced. I used to tell my young generation, because the young generation today, they are coming and asking me, sir, what is the exposure you will give me? I used to ask only one question, how much exposure I can give you in just 650 days of your working? Because today the articleship is reduced to 2 years. And 100 days or leave for Saturday, Sundays for 2 years. And another 15, 20 days they will take. Though they will work for 600 days or less than 600 days, how much exposure they can give, irrespective of the exposure, how much you can learn? That's the question. But let us go into the topic directly. Originally, tax audit is introduced. Government want to reduce their burden on scrutiny assessment. Here I would like to share very important. Before tax audit was introduced, in this country, 80 to 90% of the business accounts are called for and scrutinized by the income tax department. You may not have the experience. I had the experience in 85, 86, 87, 88, 89. Every businessman will be called, ask him to produce the account. The officer will sit on the account for 2-3 days, scrutinize the account. After tax audit provision is introduced, one point of time, the scrutiny assessment on business assessee is 30%, 20%, now it is less than 5%. Even in your experience, as a practicing chartered accountant who are mainly practicing on tax, you could have known very well, out of 100 business return you are filing, you may be getting maximum 5 or 6 cases for scrutiny. That also sometimes, not all times. Why? Because government want to collect maximum information for their analysis through the chartered accountant. Here I would like to tell you one important point. After computerization, I don't know how many of you know that the computerization of the department takes place. The first computerization of the department takes place only in 2006. Company returns are mandatory of filing return, ITR returns in online. Then subsequently evaluation taken place. During my chairmanship as a Central Council member, during 2013 to 15, my first term of the Central Council, during my chairmanship at the Direct Tax Law Committee, 2014, online filing of Form 3CD, 3CA, 3CB along with 3CD has taken place. That is the first time. Now department is, you know very well, because Amit told that every week we are having a session on artificial intelligence, AIs. Government is now having lot of data. Not just only lot of data, they are having lot of data with accuracy. But they are not having that much of human manpower to analyze and take action. Please don't underestimate the government after Operation Sindoor. Don't think that I'm very practical. When the government sitting here able to hit an enemy country, making their air traffic nullified and hit the target beyond 100 kilometer, it is very easy for the government to identify and scrutinize the books of accounts and financial transactions. To that extent, they are having the software. You want, you can confirm with my friend also, Mr. MP Vijay Kumar. We are very close friends, and sometimes he may be also given lecture on auditing standard. The government software today, whatever they are installing for all the scrutiny is much more superior than private people. So first we have to take into account. Then when we come for this tax audit report, now the government is giving certain asking extra information. They amended around 6 to 7 clauses in the tax audit report for getting additional information. In earlier years, I'm talking about prior to 2016, this type of amendment, they will ask only 3 months or 2 months before the due date of tax audit period. But after the present government taken charge, Modi government taken charge, we had a big meeting in 2015-16. At the time, Mr. Arun Jaitley was the finance minister. The ICAI and the government come to an understanding, as much as possible, wherever possible, all the amendment to the form shall taken place before the commencement of the assessment year. Any senior chartered accountants here sitting, those who are filing return for last more than 2 decades, they know the new form will come only 1 month or 2 months before the due date of filing return. Now, before even commencement of assessment year, it is coming, because it is an agreement reached between the ICAI and the government. All major amendment to the form or everything has to come before the commencement of the assessment year. Then only it will help the practicing chartered accountant community to plan their audit. So that is the reason even present amendment came on 28/3. So this is applicable for the financial year 24-25, assessment year 25-26. This amendment rules with effect from first day of April 25, 28th March 25, it has been announced. Why this amendment suddenly? Because this amendment to the form taken place due to the reason that certain amendment to the act taken place. In Finance Act 2024, certain amendments has taken place relevant to the computation of profit and gains of business or profession. So, the relevant amendments are brought in the tax audit form 3CD, which is annexed to the tax audit report, in complying with the provisions of the Amendment Finance Act 2024. That's the reason this amendment has taken place. I am going one by one amendment. The first amendment is in class 12, which talks about presumptive income. You know, the list of presumptive incomes are there: 44 AD, ADA, AE, and B serial. B serial is mainly for non-resident. Here, one of the major amendment which has come because there is a dispute between the assessee and the department. Because most of you could have known and studied, if anybody is dealing with the shipping company, non-resident shipping company business 44BB, they are connected with non-resident shipping business. The presumptive income is 7.5%. So read with section 172 if you go through it. Wherever non-resident ship visits India. So what happened? Generally, non-resident ship government presumption is only the ship of the goods carriages, very rarely passenger carriages. You know, the cruise ships are luxurious ship. The profit margin is high. Those ships also, they declared income. Cruise ships also declared income at the rate of 7.5%. They said you use the word non-resident shipping company. When you use the word non-resident shipping company, every ship will fall under the category. And the assessee won the case because the law is having the word, simple word, non-resident shipping company. This does not distinguish between normal ship and a cruise ship. Department lost the case in the courts and tribunals. They thought that it is better to make an amendment. So last year they introduced a section called Section 44 BBC. So what happened? Income of a non-resident shipping company, generally 7.5%. In that section, they deleted the word excluding cruise ships. Excluding cruise ship. And they incorporated the word separately for cruise ship, and their presumptive income is brought it as 20% of the aggregate of the gross receipt. So there is a normal ship, 7.5%, non-resident shipping company. At the same time, it is a cruise ship, it is 20%. So when they brought in a new law for the class 12, the tax auditor who is auditing cruise ship company, he has to give the details about the cruise ships in 44 BBC. Practically, in my opinion, in this country, less than 200 auditors only report on this class. So it is, I don't think so it is much important from the point of view of the thing, but it is one of the major amendment which has come. Secondly, they said in clause 19, they removed certain section 32 AC, AD, AC, CCB. I don't want to go through this section. All these sections are redundant, removed from the act long back. But in reporting form, still it is alive. So every time when we do audit, whether it is coming and we ourselves go and see, oh, this section is omitted, this section is omitted, this section is omitted. So all these things are removed from the form, so which is don't have a more important part. Then, so class number 19, certain list of sections are omitted, so which is having no importance for this. So we are not considering that area. Then in clause 21, expenditure incurred to provide the benefit or perquisite, it is already there. Then expenditure incurred to settle proceeding initiated in relation to contravening under any such law notified by the central government. See, this is a very important thing which we have to consider. If you are doing tax audit, if you are going through the assessee's business income, very important point I would like to share here is, I'm going to ask these nearly 66 participants that somebody can answer this. We are preparing a manufacturing account, trading account, profit and loss account, everything. List of expenditure on the debit side is there. I'm going to ask you a simple question. Out of all the list of expenditure, which section plays a crucial role in allowability of expenditure? Anybody can?
37.1. 37.1.
Why? Very good answer. 37. Why? Which only
Salary
covers
itself.
95% of the expenditure debited in P&L account. See, everybody thinks section 37 is the smallest section. Size-wise, it is the smallest section. I used to tell, the divine is small, the power is very high. The smallest section, maximum 6 or 7 line. but which covers 90 to 95% of the profit and loss account. Any expenditure incurred during the course of business for the purpose of business. There the government inserted a provision which is contravening the provision of law, which is not contravening the provision of law, or penal nature, not allowed as a deduction. This amendment came only subsequently after 1961, around 8, in my opinion, around 90 or 96, this amendment came. Any expenditure of penal nature. Original law, if anybody read, any expenditure incurred for the purpose of business shall be allowed as a deduction. So what happened? A person was a smuggler. I'm not telling any hypothetical story really. A person was a smuggler. He has been caught by the government and his income is, his assets are seized. He went to the court, incurred a lot of legal expenditure, ultimately came out of the case. Whatever the expenditure he incurred, he claimed as a deduction. Income Tax Department said, smuggling is an illegal activity. So any expenditure in relation to the illegal activity cannot be allowed as a deduction. This person went up to Supreme Court and won the case. Simple reason, as per income tax law, legality of income is not questioned. Income can be earned even a legal way or illegal way. Even I can make a bank robbery, earn 500, take 500 crore, offer 42% income tax, Chief Commissioner of Income Tax will be happy. He got his share. But only Police Commissioner will catch me. Different law. So any expenditure contravening the provision of law shall not be allowed as a deduction or penal nature. But subsequently, what happened in 2002 or 2003, there was a case, a doctor by profession manufactured heroin tablets and sold in the market. He has been caught by the narcotic department and his stocks are seized by the department. He claimed, I have not claimed the expenditure, I claimed the loss of material. The section talks only about the expenditure. Supreme Court allowed the deduction because it not used the word loss. That's the reason they brought subsequent amendment, whatever the law notified by the government. Because you may commit any mistake under any law, any expenditure connected with contravening the provision of law. So such expenditures are debited in profit and loss account. You have to make a report in clause 21, expenditure to settle the proceedings initiated in relation to contravening any of the provision of law. If you come across during the course of audit, legal expenditures, that can be reported here under clause 21. So here, one major challenges for the assessee is there. Practically for the auditor, the client has to tell the truth what fees has been paid to the lawyer. It is a lawyer retainership fee, then you cannot apportion anything from that. So practical implications are there. But if you are able to connect the expenditure connected with the provision of the anything violation of law you come across during the course of the audit, then you can claim it as a reduction. This is very important amendment. It is in relation to amendment which has been brought in section 37. Then amendment in clause 22. Last one and a half year, this is the big discussion going on everywhere. 43BH payment to MSME. MSMEs are reporting about MSME. What is the viewer's view on MSME after 1 year of experience? Anybody? See, 43BH MSME payment, micro and small industries payment, already there is a provision. If you paid interest, it shall not be allowed as a deduction. Section 36(3) itself, it is that for belated payment. Now the payment itself is not made within Section 15 of the MSME Act as notified, especially for micro and small industries. And the auditor has to report how to overcome the provision. I think so. No departmental officials are attending this meeting.
No, sir.
So what is instead of I am telling you, what is the expert view with your experience? Anybody on 43BH? Remittance payment to the MSME, I think so. You know that within 15 days of delivery of goods, you have to make the payment.
Yes.
Otherwise, if the 15 days fall within the previous year and you can make the payment, no problem. If 15 days fall after the end of the previous year, before the date, that means March 31st delivered goods, before April 15th you are making payment, you can claim it as a reduction. Subsequent payment only for the next year, year expenditure, you cannot claim it as a deduction. Ultimately, the problem is the year in which actually paid, it is the due date of filing return will not apply for this clause. How to overcome this effect of the clause? Because one person benefited is MSME. Do you know one interesting point? After this clause is introduced, I recommended all the chartered accountants in their invoice, as per Section 43B, read with Section 15 of the MSME Act, provided the chartered accountants firm registered under MSME. We are entitled to register ourselves under MSME. All our invoices we specifically mention, whether you are mentioning or not, in my office I am mentioning very clearly, if the payment is not made within 15 days of the invoice, your expenditure will be disallowed. So whether it is helping others or not, it is helping a lot of chartered accountants to get the payment from the client immediately. Those who are carrying on business subject to tax audit. Now but let us come to the practical issue. You know, certain companies, even certain MSMEs to making payment, other MSMEs, taking 30 days, 45 days, 60 days, 90 days credit. What is the advice as a chartered accountant from your end you are giving? No answer? Nobody willing to give it? Because in MSME Act, if you go through it, one interesting thing is the day of acceptance of the goods. Generally, the day of acceptance is the date of delivery. Second is within 15 days of receipt of the goods, if the receiver, buyer make any objection, then the date of delivery is subsequently rectified by the supplier. So you want to overcome,
That's it.
have a clear agreement between the supplier and the buyer. Day of acceptance is day on which the goods are cleared by the quality control department. Notwithstanding anything contained in the provisions of MSME Act. See, you are the supplier. I am the buyer. We generally agree for 30 days credit, 45 days credit, 90 days credit in the business. 31st March, I am making please be practical. Let us be practical. 31st January, you are supplying the goods. As per our terms and condition, I have to make payment only on April 30th. 90 days credit. I purchased the goods, I utilized the goods, everything I made. But I am not able to claim the expenditure because as per our contract of supply, I am making the payment on 90th day. Because of this type of provision of law, I cannot carry the business peacefully. So those cases, in our clientele base, we advise the client, wherever you are having payment terms more than 15 days, to overcome this provision, have an agreement, supplier agreement, irrespective of the date of delivery of the goods within the premises, the date on which it is accepted for its quality by the receiver of the goods, that date will be considered as the date of delivery of the goods. So before making payment, put some day as within 15 days as a quality accepted. Have a 100 rupees stamp paper agreement. That's all. Otherwise, I cannot run a business here. How many clients are paying MSME within the 15 days? So this is a practical problem there. But now the government wants, please report, make a report considering a provision of law. How much paid within mentioned in section 15, paid up to the time in section 15, not paid up to the time given in section 15 of the inadmissible as per the previous year. All over. So now they put a responsibility on the chartered accountant's head itself. You have to tell the government how much is inadmissible. Till last year, this problem is not there. Now this problem is there. How much is inadmissible? So our suggestion is for section 15 to overcome the effect of section 15, date of acceptance through your agreement, if you are able to bring near to the date of payment, which is less than 15 days considered by section 15, bring as per that and have a separate agreement for each supplier to practically overcome the situation. Otherwise, any assessee without proper agreement making payment beyond April 15 for any goods received up to 31st March will be disallowed. And we have to make a report in this clause 22.3b. We have to make a clear report. So this is the very important thing. But here also, that Udan certificate is essential for classifying MSME. Some people are telling, I won't say, I'm not having Udan certificate. I'm not a registered MSME. Taking a declaration, they may be practically MSME, but they are telling you, I'm not an MSME. From where you will verify? Only document to verify MSME is Udan registration. Take a declaration from the supplier. I am not registered under Udan scheme. So automatically this class will not apply. This is the other way. How to overcome it if you want to advise your client, because we practically know so many manufacturing clients are making payment in 30 days, 45 days, 60 days, 90 days. One point of time when the country was in recession, they make the payment in 120 days and 180 days. Some senior chartered accountant sitting here, Mr. Venkatesh Kamath, may know very well. We could have come across so much of cases, so we could have faced so many recessions in this country. So this is one of the major amendment which has taken place. Another important amendment is clause 31. Here that I would like to bring to your notice, clause 31. Amount of loan or deposit taken or accepted, previously we have to report to the amount only. But now the practical problem is they are giving a big drop-off box. In tax audit form, they are going to give you a big drop box. Other than account pay check, whether it is a cash payment or cash receipt, whether it is a non-account payee check or non-account payee receipt. See, this problem is concerned even when I was in the ICAI Council, Central Council. We represent to the government. I don't know what is the government still not listening to this. We are having another provision, you know very well. Section 40A3. Any expenditure in excess of 10,000 only by account payee check. Somewhere from the Western law, they copied this provision. The difference between Western countries and Indian system of banking is still North Bloc not yet understood. In Western countries, even in US or European countries, when I issue a check to my client, the original check will come back to the issuer after making payment. Your check is processed and paid, you take the copy of the check. But in India, the system is not there. Whatever the check we issued, it is not coming back to us. As a chartered accountant, I am asking question. I am doing a post-mortem service. How do you know whether a check is issued is account payee check or account payee draft? That's the reason Institute is telling in the guidance note, take a declaration from the client. All the check issued are account payee check. As reported, management representation letter, we are absolving our responsibility. But we represent to the government practically, remove this provision of law itself. Bring similar some other amendment. Or ask the banker in their banking statement itself, any payment in excess of 10,000 other than account payee check, you permit a different mode. Except that permitted mode, it is coming. Non-account payee check. Those things you yourself ask the bank to report, because bank only know whether it is an account payee check or a non-account payee check or permitted banking channel payment or other banking. What we will get from the banking statement? Only a debit or a credit. So this is the practical problem. But now government is wanting furthermore thing, transfer of asset, transfer of liability, conversion of asset, conversion of liability, journal entry, any other mode. Sir, loan or deposit, how they are coming by transfer of asset or transfer of liability? We chartered accountants are too intelligent to advise our client. Now government is also made themselves more intelligent. Any loan or deposit repaid through other than account pay check or account pay debt. Suppose I am liable to repay Mr. Chennai 1 lakh rupee. Instead of paying money, I can transfer Infosys shares to settle my liability. It is also settling a repayment of loan or deposit other than account pay check only. Account pay check only. This is the way so many things taken place in the book entry adjustment. Because somebody asked me when the class is introduced, sir, class talks about loan or deposit other than account pay check. Why they are asking conversion of deposit, conversion of asset, conversion of liability through the journal entry. Through the journal entry. We all know very well. Passing so many journal entries, so many liabilities we closed, so many assets also we closed. Some debtor not able to pay, some creditor we don't want to pay, we will adjust within the books. Automatically passing a journal entry, it will be closed. To avoid section 41, one side, deemed business income. To avoid section 269 SS, repayment, passing. We ourselves advise so many situations. Now government wake up. You yourself report how many entries of loan or deposit is adjusted through journal entry, adjusted through transfer of asset, adjusted through the conversion of asset and all mode. Now you have to make a report. So they go into debt, not only account pay. You only talked about payment through account pay check. Other modes of transaction does not apply. Now we cannot be like that. So Institute is also now started working. 2 days back, they constituted a new committee for preparing a new guidance note on tax audit report, because this is a very important provision of amendment which has come in the tax audit report. The last point I want to say is they inserted a clause 36B, because last year they brought an amendment on deemed dividend. Earlier, deemed dividend applicable for normal dividend or interim dividend or closure of company, liquidation of company, or reduction of capital or loan by a closely held company. Now, during the course of buyback of shares, company itself buying back shares, buyback of shares, government want to consider the amount by deemed dividend. How? Why, sir? When they're buying back shares, I am liable for only for capital gains. Why they are bringing deemed dividend? Reason is, government is having a view on the day of buyback. If you are having accumulated profits, to what extent accumulated profit? Because if it is a long-term capital gain, then today you are liable to pay maximum 15% including surcharge and cess. 12.5% plus surcharge and cess all put together, 15% surcharge and cess all put together, 15% only coming. But if it is a dividend income, 42%. Normal rate of tax, normal surcharge. I'm talking about highest income people slab. Nearly 42% are coming. So, which company is going for buyback of shares? The company which is very strong, having huge cash-rich company with huge surplus of reserves. They are only going for generally buyback of shares. So, instead of declaring a dividend, they may try to buy back their shares at a premium price and helping the shareholders, instead of paying dividend tax of 30%, 33%, 42%, make them to pay 15%. Government thought buyback of share is other way of tax planning to reduce the tax. So they thought that to the extent of accumulated profit, it will be treated as deemed dividend. So any company buy back the shares and declare dividend, and those company make a report on amount received and cost of acquisition on the buyback, everything in the hands of through the buyback. But here the practical problem is the business assessee received by way of buyback. Here the interesting point is they've spoken about the company buyback. Suppose I'm a businessman, I invested in shares, I got the buyback, okay. Because the clause talks about buyback of shares as referred in clause 20, amount received, any amount. So this clause applicable only for the receiver. Government slept, in my opinion, as an experienced chartered accountant, government slept here. This clause should be for the payer. It should be for the payer. And give the list of the payers who received the money. Because anyhow, the dividend is not taxable in the hands of the payer. It is only in the hands of the receiver. How many receivers are subject to tax audit? In this country, only 27 lakhs people are subject to tax audit. Let me say, it is a latest record. In this country, out of 1.4 crores of GST registered assessee, 27 lakhs people are only 27 lakh in the sense it includes individual, HEF, firm, LLPs and company all put together, liable for tax audit. But how many investors? So I don't want to open my mouth. So if your client received the money, you report it, otherwise don't bother. That's a situation. Provided That also he brought in his business books of accounts, which is subject to tax audit. Suppose you are a chartered accountant. Your investments are, let me be very frank. You are a chartered accountant, I am a chartered accountant. Suppose you are a proprietor. Your accounts are subject to tax audit. But all your investment and other thing, you are not bringing into your books of account, you are keeping separately. Am I required to report? How do I come to know that? My responsibility is only auditing the accounts. In that accounts, any buyback is there. It is the buyback of my investments are outside my business books of accounts. Then I am not required to report. Because first point I am telling, in Form 3CA or 3CB, as per the books of accounts, it is compliance with. If these transactions are not forming part of the books of accounts, and the amount received is not part of the books of accounts, which is subject to audit. Think of a small businessman buying and selling goods. He is also investing in shares. But his share transactions are outside the books. He is declaring as an income from other sources and he is showing separate statement, which is not subject to tax audit. Then I am not required to report. Where it is, the transaction is coming within the books, then I have to report. Otherwise, I am not required to report. This is in relation to the new insertion of clause 36B related to buyback of shares. My dear friends, already I have taken 42 minutes. So any question from your end?
Sir, good evening. Venkatesh Kamath here.
Yes, sir.
Thank you for a very nice erudited discussion, and it was a very nice to hear. Sir, I have one small query. These UDAN certificates, they are issuing to every person, even trader and manufacturer and service provider or whatever. But,
MSME certificate.
MSME certificate. Yes, right, sir. So that, but then one interpretation, or which is plain reading of this one, is that traders are excluded. We need not have to consider.
Yes.
Only service provider and manufacturer. He should
MSME Act mainly manufacturer.
Manufacturer, micro. That also micro and small technically.
Yes.
Only
Yes.
manufacturers and the service provider. Service provider is not excluded technically. Service provider like chartered accountants or any consultancy or all this one who should have been registered. Right? That clarification I just wanted. Correct. No, traders are excluded because
traders are excluded.
Udar certificate is issued to everyone who is applying with whatever the criteria.
Yes.
So that means I've been finding difficult to train the clients the situation.
Sir, we are telling the client very simple manner.
Okay.
Get a letter of acknowledgement from the client.
Okay.
I am not a person MSME registered.
That's
Whether it is a true declaration or not true declaration, it is not my duty to verify.
Right. You're right.
I don't have a source to verify.
Absolutely.
Even he may be GST registered.
Mm-hmm.
From the GST registration number, I cannot identify whether he is an MSME registered or not.
Yeah.
Who will find problem? Only with the clients. It is between the supply and the government should want to support this type of people.
Right.
They should not do how to do business.
Yeah.
MSMEs are, see, this is what, when the law is introduced 2 years back, so many MSME customers are coming and telling why the government given the law, he is not giving me an order.
Yeah. I understand that a couple of main companies, they stopped placing the order.
So that's the reason we told the clients between that, get a declaration letter, I am a person not MSME registered.
Okay.
He may be registered for his banking facility and other thing, let him do it.
Absolutely.
I get a letter from the client, I am not MSME registered. I don't have. If we give you a false declaration, for that as on date,
Yes.
in any law there is no consequence.
Right.
And it is not the responsibility of the chartered accountant to go and verify whether you are in MSME registered or not.
Yes, you're right.
My client produced a declaration from the supplier of the goods or provider of services that he is not MSME
Registered.
Registered. He is not coming under Section 15 of the MSME Act. Finish. Oh, that's all.
Sir, in the lighter note that when you are telling about cash, check this one, unpaid and this one, are we doing post-mortem? You said. I was just remembering, body has not come, how do I do post-mortem? Check
That's
it,
what
sir.
we have told the government. See, when the government asked me
Yeah.
how to do it, we told the government that if you want to really do it,
Yeah.
aggregate cash payment in excess of one. Instead of giving every day 10,000 rupee, 10,000 rupee, 10,000 rupee, I can make 9,000, 9,000, 9,000,
Right.
9,000 like that. You make a limit, aggregate a payment 1 lakh or more, which has been made to any person. Make 0.1% TCS.
And then 194C is something similar. Yeah.
No, 0.1% TCS
Right, right.
or TDS when you are making payment. Automatically, what is your duty? You want to identify the person whether he is declaring that as his income or not.
Yeah.
So you are fixing the responsibility on the payer.
Right.
So better, if I deduct, you go and see. That's what we told the government. But they brought certain other provision. Still, they are not confident on what they are doing. That's a problem.
But in 93 to 95, 1 or 2 years, what I observed was the State Bank of India, their software, when they migrated, uncrossed checks they were showing as a cash in the
Yes.
ledger. Uncrossed check as cash 50,000, cash 60,000 used to come. So we used to identify, but as an assumption. But within 2 years, they changed the software itself. It was.
But that also, you know very well that after that
Yes.
business community objected, they stopped it.
Right. Because your software, you do whatever, but you cannot have because it's to come clearly. If it is a company name will come. If it is crossed check means company name or a person name is to come. If it is an uncrossed check means cash is to come. Just for a period of 1 year or less than a year, because I was an accountant and we was looking into that accounts. I had a lot of this one I remember that one.
Sir, that is the initial stages of computation of
Yeah, right.
accounts.
You are right. So they would have been then after businessmen would have changed because business is done for the business, not for the rules and follow the tax.
Thank you, sir.
Thank you, sir. Amit,
Yes, sir.
I would request something similar in regular intervals kindly carry out. Sir,
Sure, sir.
this one is very nice and we would like to hear you more and take it further. It's this platform, just help us out. Any questions, Amit? You can just.
Nothing, sir. Thank you, G. Sekar Sir, for delivering wonderful session. I hope everyone has enjoyed the session. You have brought a lot of practical aspects to the theoretical provisions. Thanks for the session, sir.
Thank you.
Thanks for making your time to conduct the session.
Thank you. Very nice to meet everyone.
Thank you, sir.
Thank you, sir.
All of you, please fill the form which you have sent in WhatsApp channel and WhatsApp group so that we can send the materials and session related updates. Thank you, everyone.
Thank you, sir. Thanks, Amit.
Once again. Thank you, sir.
Thank you.
Thank you, sir.
Thanks.